What are the 5 side effects of bad credit and how to improve it? You should know these side effects because bad credit is hurting our daily lives. But first, please subscribe and watch this video with the chance to receive $25 gift card. Why is this video so important? We've got something that's going to knock your socks off. It's funny, it's informative, it's everything you've been looking for in a YouTube video. Trust us, you won't regret watching this one. Watch and learn, then you can be one of the winners of the $25. We will choose 5 subscribers. Without losing your time, let's talk about these effects and help you take informed decision for your future. We will give $25 to 5 random subscribers. Just make sure your email is good to receive the email when selected. Do not use fake email, otherwise you might miss it because it will bounce back. Good luck. Number 1, you are a big risk to lender. When you have bad credit, it means that you have a history of not repaying your debts on time or in full. This history of missed or late payments, default, or bankruptcy makes you a high-risk borrower in the eyes of lenders because they may see you as someone who is more likely to default on a loan. If you apply for a loan with bad credit, the lender may perceive you as a high-risk borrower and charge you a higher interest rate or deny your loan application altogether. This is because lenders use your credit score as an indicator of your ability to repay the loan. The lower your credit score, the higher the risk you pose to the lender, and the higher the interest rate they may charge to compensate for that risk. Moreover, if you have a bad credit history, you may also have a higher debt-to-income ratio, which means that you have more debt than your income can handle. This makes you less likely to be able to make payments on a new loan, which further increases the lender's risk. Number 2, you will pay more for a loan compared to other people. When you have bad credit. If you have bad credit, you will likely pay more for a loan. When you apply for a loan, lenders will look at your credit score and credit history to determine your credit worthiness. If you have bad credit, lenders will consider you a higher risk borrower and will typically charge you a higher interest rate than someone with good credit. The interest rate on a loan is the cost of borrowing the money, and a higher interest rate means that you will pay more in interest over the life of the loan. For example, if you have good credit and you borrow $10,000 at a 10% interest rate for 5 years, you will pay a total of $12,748 in principal and interest. But if you have bad credit and are charged a higher interest rate of 15%, you would pay a total of $14,548 over the same period, which is $1,800 more than if you had good credit. In addition to higher interest rates, lenders may also require you to pay additional fees or provide collateral for the loan to offset the risk of lending to someone with bad credit. Therefore, if you have bad credit, you can expect to pay more for a loan than someone with good credit. But if you have bad credit and are charged a higher interest rate of 15%, then you would pay a total of $14,548 over the same period, which is $1,800 more than if you had good credit. That sounds bad, right? In addition to higher interest rates, lenders may also require you to pay additional fees or provide collateral for the loan to offset the risk of lending to someone with bad credit. Therefore, if you have bad credit, you can expect to pay more for a loan than someone with good credit. Number 3, insurance premium to go up. There is a high probability for insurance premiums to go up if you have bad credit. Insurance companies use credit-based insurance scores to determine the risk of insuring a customer. This score is based on your credit history and helps the insurance company determine the likelihood of you filing a claim. If you have bad credit, you may be considered a higher risk to insurance companies, which could lead to higher insurance premiums. This is because people with bad credit may be more likely to file claims, and insurance companies may charge higher premiums to offset the potential costs of those claims. It's important to note that not all states allow insurance companies to use credit-based insurance scores to determine premiums. And the use of credit information for insurance purposes is subject to regulation in some states. However, in states where it is allowed, having bad credit can impact your insurance premiums. It's always a good idea to shop around for insurance and compare rates from different companies to find the best coverage and rates for your situation. Number 4, you will probably miss out on career opportunities. It's possible to miss out on career opportunities because of bad credit. Some employers may check the credit reports of job applicants before making hiring decisions, particularly for positions that involve financial responsibilities or handling sensitive information. This is more common in certain industries, such as finance, banking, or government. An employer may view a poor credit history as a sign of financial irresponsibility or poor decision-making skills, which could make you a less desirable candidate for a job. For example, an employer may worry that you could be susceptible to financial fraud or theft, or that your financial troubles may cause you to be distracted at work. This could make them hesitant to hire you or offer you a promotion or advancement opportunity. However, it's worth noting that not all employers check credit reports, and some states have laws that limit or prohibit the use of credit information for employment purposes. Additionally, employers who do check credit reports must obtain your permission to do so and are required to follow federal and state laws that protect your rights. If you're concerned about your credit history affecting your job prospects, you may want to consider taking steps to improve your credit score, such as paying your bills on time, paying down debt, and disputing any errors on your credit report. You may also want to be upfront with potential employers about any financial difficulties you've faced and explain any extenuating circumstances that may have contributed to your credit history. However, it's worth noting that not all employers check credit reports, and some states have laws that limit or prohibit the use of credit information for employment purposes. Additionally, employers who do check credit reports must obtain your permission to do so and are required to follow federal and state laws that protect your rights. If you're concerned about your credit history affecting your job prospects, you may want to consider taking steps to improve your credit score, such as paying your bills on time, paying down debt, and disputing any errors on your credit report. You may also want to be upfront with potential employers about any financial difficulties you've faced and explain any extenuating circumstances that may have contributed to your credit history. Number 5, it will be hard to rent an apartment house or anything. Having bad credit can make it harder to rent an apartment. Landlords and property managers often check credit reports as part of the application process to assess the financial stability of potential renters. If you have a poor credit history, the landlord may view you as a higher-risk tenant and may be less likely to approve your rental application or may require additional conditions, such as a cosigner or a larger security deposit. If you have bad credit, you may also have difficulty finding an apartment in highly competitive rental markets or in areas with high demand for housing. Landlords may have a lot of qualified applicants to choose from and may prefer tenants with better credit histories. In some cases, a landlord may be willing to rent to someone with bad credit if they can provide other evidence of financial stability, such as a letter from an employer or a larger security deposit. However, this is not always the case, and it may be harder to find a landlord who is willing to take a chance on a tenant with bad credit. It's important to note that some states have laws that limit the use of credit checks in the rental application process, and others require landlords to disclose how credit information will be used and to provide an opportunity for applicants to dispute any errors on their credit reports. If you're concerned about your credit history affecting your ability to rent an apartment, it may be helpful to research the laws in your state and consider taking steps to improve your credit score. That is some cool stuff that you have learned. Thanks for watching, and please subscribe, and hopefully you will one of the lucky winner of the $25 winner gift card. See you in the next video and out how to improve your bad credit for better life. Bye now.